I'm a math person. I have to see the numbers for it to make sense. So tracking your numbers is going to be the theme of today's video. You have to. And I know most people really suck at this. And I know most people really suck at it because I've been coaching people on their personal finances for 15 years. Thousands of people a year I've been coaching on personal finances. So I recognize the very inconsistent approach people take with their money. They're not consistently tracking. It's very rare when I see it. I would argue it's single digit, if not low single digit percentages of people that are consistent about tracking. How can you expect to be consistent about your investing if you can't even be consistent about your tracking? All right, so you know how the saying goes, Michael, when there's blood in the streets, sometimes that's where you're going to find the best opportunities, even if it's your own blood. I'm certainly experiencing that myself. From all-time highs back in November, I'm now down about $550,000, significant percentage of my portfolio in cryptocurrencies. I don't want to spend the entire conversation today focusing exclusively on cryptocurrencies. And before we get into crypto, because I do want to talk a little bit about, the effect of the downturn in that space on my game plan. I think it's important to kick this off by really emphasizing some cautionary advice for the listeners of this channel. And this goes back to things we've been talking about since the inception of this channel, especially the last couple of years since the pandemic, where we said, you've got to really tighten things up, my friends. This is the time that if you hadn't spent the last couple of years doing it, you just don't have a choice now. And those cracks that we've been discussing, we were seeing in terms of being at all-time high debt loads, people not managing their cash flow the right way, people's jobs being at risk, income levels staying consistent at best while inflation skyrockets, interest rates going up. These are talking points that have been around for a long time, and you should have been listening then, but if you weren't, now's the next best time. And it's going to start with buttoning up your spending. And the way you really know whether or not you're doing that is through a very careful tracking process. There are a ton of resources out there. I think mint.com is a great resource, totally free. The Cash Flow Cruncher, we've given that away here on this channel for over a decade now. You can go to cashflowcruncher.com. I'll throw a link in the description to make it easy on you, but you can download that for free. It's a simple to use Excel spreadsheet, tracks what your earnings are, your expenses, and it's going to spit out these really great details for you that allow you to really keep your eye on the ball and take advantage of opportunities as they come up over the coming years, because there will be a ton of amazing opportunities. And it doesn't take a rocket surgeon to realize that. If you had bought real estate in 2010, you would be killing it right now. And even if you'd purchased real estate in 2017 and 18, after many people thought the recession was long overdue, another downturn, you'd be killing it. So being prepared is the best possible scenario for yourselves. And that's going to start with really getting your personal financial budget management in order, tightening things up, and doing so by really preventing unnecessary personal spending. That includes paying high, exorbitant interest rates or interest costs on personal debts. So really making sure that you're following the protocol here on this channel that we've been teaching for many, many years now. Over 10 years, we've been saying that you really need to manage your cash flow a specific way. So going back and really referencing a lot of those older videos, they're as relevant as they've ever been. Okay, so I would start by really encouraging people to take that first step. Beyond that, however, there are a lot of folks that we talk to on a day in and day out basis that are still looking for these creative financing options. Things like bridge loans and hard money loans that come with, again, higher interest rates in the 8, 9, 10, 11, 12% range that require a short-term refinance of some kind and have to be satisfied within 3, 6, or 12 months. And if you end up in a jam where another asset class, something like real estate, falls at rates like we've seen before and like I'm seeing now inside my crypto portfolio, you may find yourself in a real predicament, one where you can't refinance, you can't sell, and now you're stuck with a property that you may not be able to afford, and worse yet, get out of a loan that's required to be paid off and is ballooning on you. So very, very important that you shore up your debts, and that as you're exploring borrowing new money, you're doing it in a way where you're very careful how you're moving forward. And that also goes into a conversation I'd love to chat with you about today too, regarding interest rates. I think looking at interest rates increasing and the fact that we're seeing adjustable rate mortgages double from last year at this time, the applications submitted for those adjustable rate mortgages so that people can actually get in to properties that they would have been able to afford just a few short months ago and no longer can. I think being very worried about interest rates and the risks that come with those is very, very important right now. And I think the final thought here on kind of the precursor of today's conversation and recommendation I want people to walk away from this with is just being very careful about who you're listening to. There are a lot of influencers that mean well and haven't necessarily endured a serious downturn before. And I'm not sure that we can consider the recession we went through a couple of years ago as severe as the one that may be on the horizon today. And when we see the size of these cracks that are beginning to develop, and people that I have a tremendous amount of respect for, and when you see these investors and you see these banks that are starting to come out and verbalize that there is a recession looming, it's really time to tune in. So pick who you're listening to very wisely. Don't take unnecessary chances with somebody that's overly optimistic. And so I guess those would be the first few points I want to at least start with in terms of advice. So even if you choose to check out of some of the details behind today's video, you'll at least walk away with those recommendations. And frankly, that could be all that's necessary to save your ass. So get in there, start managing your budget very carefully, do these audits, make sure you're not leaking, hemorrhaging money unnecessarily, make sure you're not paying interest costs that are unnecessary, make sure that you really get that tightened and buttoned up. You can always go onto the VIPfinancialed.com website and see what our coaching memberships look like too. Be happy to work with you on a one-on-one basis in order to help you really get that under control so that you're in a position to really strike when you see a phenomenal opportunity. I also want to add something, because I'm not sure that we necessarily see eye to eye on this one, Michael, that it could be a good time to kind of consider pausing certain expansion or growth opportunities. I know that you're a guy that really takes action, and I think being able to do that quickly when you see a great opportunity is critical. However, I think it needs to be more compelling than it's been in order to move forward on something. I don't think moving on thin margins makes a lot of sense right now. Maybe sitting back and waiting to see what happens is something that you'll be glad you did down the road. So where do you want to start this thing off? You want to talk about crypto? And I know you're not super involved with it, but I'd be happy to kind of at least get back to what I was saying about that dip and share a little about what I'm doing there.
Yeah, and I love talking to you about that space. And like you said, I'm not super involved in it, but I love to get your feedback on it. I know you've taken your lumps here over the last few months. I think it's at its lowest right now since December 2020, and you're about $500,000 in the red since then. What's your take on it? What are you doing at this point? What's that? You've been buying it on the way down. I know that. I know you've been buying it on the way down. You've been dollar cost averaging. You've done videos on that. Has your philosophy changed? Has your mindset changed on it? I know it's been a long-term play for you forever. Are you doing anything differently now than you were, 2 months ago, 6 months ago?
All right, great question. I actually want to show a website here. This is a website I found last April, so about a year ago, and it really opened my eyes on what is possible when you're just consistent about things. And I think what I want to point out is when it comes to cryptocurrencies, I am in no way, shape, or form an expert on it. I'm constantly bewildered. I'm listening to people that know far more than I do. This is not the channel to come to for your cryptocurrency investment advice or education. This is just simply an example of how I'm choosing to go about things personally, because I see the long-term play here. And I want to be very clear about that. There are ways of looking for short-term opportunities inside cryptocurrencies and even ways of producing an income stream through that space. That's not what I'm doing. I'm going about this exclusively through a long-term lens. I'm looking at this over 10, 15, 20 years, and I have been. And it helps me desensitize, which means I'm actually really only focusing on investing in cryptocurrencies with money I can afford to lose. And that's a very important aspect to this. God forbid any of you have gone out and leveraged your way into cryptocurrencies. That is a huge mistake and something that absolutely needs to be avoided. Most things should not be leveraged for. While this is a channel that believes very, very strongly that leverage and borrowing OPM, other people's money, in order to reinvest it under speculated rates of return that can produce a margin of a return on that investment for you. This channel talks a lot about that being one of the keys to success. It's the Robert Kiyosaki concept. But we're also the people that understand that debt and borrowing will constantly remain your greatest threat. And so that's why we also focus heavily on accelerating the elimination of both non-mortgage and mortgage debts. I think there's a tremendous argument to be made for paying long-term mortgage balances off over a full 30-year period, given the recent historic low interest rates. That I think needs to be reevaluated under today's rates and moving forward. It's not an easy black and white decision, but regardless, debt is a threat. And I should probably trademark that, consider this a verbal trademark, because that's a pretty great saying. I'm going to put it on a t-shirt at some point. Let's go ahead and jump to this website. It's under dcabtc.com. This is a pretty cool resource, though. Stands for dollar cost averaging Bitcoin. Now, this is not a speculated outcome. Okay, this graph down here actually showcases what's happened historically over the period of time indicated in this drop down here. And I just want to show that if you're consistent about your investment strategies, and this obviously is specifically talking about Bitcoin only, no other cryptocurrencies or tokens, no other digital assets, and no other investments specifically. But if you're consistent, even with these massive swings, you can see that if I were to go, say, 6 years back, the chart shows this December of 2017 into January of 2018 drop off. And this is when, you might remember, Bitcoin reached an all-time high of about $20,000. And shortly thereafter, this 18 or 19 month dip started, leading all the way into March of 2019, where that $20,000 Bitcoin fell all the way down to somewhere into the $3,500 or $3,400 range. It was somewhere in the vicinity of like an 82% drop. It was substantial, right? And you've got all these retail buyers that panic when they start to see a fall off. Things like inflation or interest rates going up creates less liquidity and cash flow on a month-to-month basis. Many of you are probably feeling that inside your budgets right now. So there's just less money to go into the markets, and people who start freaking out or need the funds to cover that deficiency start pulling out of the market. And that's why you'll see a lot of these big drops. And you can see here that even if over just the last 6 years, you had been investing $100 per week, or around $430 a month, or around $5,200 per year, that's a small investment amount. And I argue regularly that if all you're investing is $5,200 a year, or $52,000 every 10 years, or $156,000 over 30 years, you're going to have a very, very difficult time coming up with enough money to live an extraordinary retirement. And off of that $31,300, you can see even with the recent drops, and this is including what's happening now, this $31,300 invested would still be worth $389,000. That's an 1,143% increase over that 6-year period of time. Let's take a look. And one thing I've loved about this website is that you can actually compare it to other assets. They've got the Dow Jones Industrial as well as gold that can be compared with. And you can see those graphs here, as well as these boxes above, with that same 31,300 showing a $38,146 value of put into gold over the last 6 years for only a 21.88% return, and a $42,656 value under the Dow Jones with a 36.28% return. So while we're experiencing something that I think terrifies the average investor, the typical Mr. and Mrs. homeowner or John and Jane W-2 wage earner, about throwing money towards an asset class like cryptocurrencies, and had you only been purchasing when things were red hot, like when it was coming up to that $20,000 point, or back when we started seeing a $65,000 high in, it looks like April of 2021, and then that falling by somewhere around 55% to $29,000 Bitcoin in just July. So we're seeing from April to July a 55% drop, all the way then to hit an all-time high again of about $68,000 in November of 2021. Look, that's high volatility for someone like me. I'm not used to those peaks and valleys either, and it's very difficult to get comfortable with that. But this type of a resource definitely reassures me that if I'm buying at both the highs and on the way down, and I'm doing that without any lapse in consistency, because the only way these numbers make add up to 389,000 over this 6-year period is because each and every week, without falter, this example is showcasing a $100 investment being made. So finding a comfort zone within your net cash flow position, going back to what I said in the beginning at the top of the show, just getting your eyeballs on your numbers, understanding your budget, proper budget management, so that you can maximize how much is left over at the end of the month. If you can't come up with $430 a month, go out and start driving for Uber. Uber Eats, you can make $100 a week with no problem driving one shift, and find a way to pop $430 in here. Because take a look at what happened over a 9-year term on this, Michael. The long term of this still shows that a $47,000 total investment is worth $2.7 million today. So for me, my buying strategy has remained the same. As a long-term player in crypto, I'm buying each and every week consistently. Now, I want to put more when I end up with windfalls, because my primary focus is on income. My primary focus is on cash flow. And the way you get cash flow is the difference between what you earn and what you spend. So the way I increase cash flow is either I make more or I spend less, or combination of the two. Well, the things I'm spending money on, I'm doing so a lot of times by choice, which means I want to. I don't want restriction when it comes to spending. I've already maximized my interest cost reductions. I've minimized my outgoing expenses on things I don't want to pay for. So the things I am paying for, I want to. So my point here is making more money for me is the key, with really no upside capacity to that, right? Whereas there is a maximum potential when it comes to spending less. There's only so much you can cut. You can go all the way through the Dave Ramsey strategy and eat beans and rice. That's not for me. I want a great lifestyle. If I want something, I don't want to be told no. I want to be generous. I want to be selfish. I don't want to care about price tags. So considering that, I want to look at where there is no maximum upside potential, which is the income side of the balance sheet. And so earning gives me the ability to afford not just a consistent investment of something as little as $100 a week, but far more than that, as well as shoving money in when I start to see these lows come about. And today is a perfect example of that. Bitcoin has been hitting numbers that look extremely attractive to me when it comes from the buying standpoint. I want to be shoving money into it at this point, not wondering why I didn't pull it out. So that goes to the answer of your question. Is that's what I'm doing with my cryptocurrencies. I'm just looking at it long term and writing it off, setting it and forgetting the automatic purchase.
Yeah, see, I think that's important for people to really recognize, is that that's just the exact opposite of what most folks are out there doing. And kind of illustration you made of, John Q, W2 wage earner that is doing that panic selling right now. Obviously, it doesn't make sense to buy high and sell low. Obviously, that's the exact opposite of what you want to do. But what you're saying is, even as it's been going down, you've been using the same dollar cost averaging technique that you utilized when it was at the peak of the market. You're continuing to buy all the way back down because it is that long-term play. It still makes sense to you. How do you get someone to make that mind shift? What does that boil down to? Basically dollars and cents. You've got, obviously additional capital just from multiple revenue streams. So you've got there prescribing to your own kind of methodology about multiple streams of income that has enabled you to continue down this path, even though that asset class is continuing to go down.
I think it's a combination of both. I think you bring up two really excellent ways of going about doing that, and blending those together is important. I'm a math person. I have to see the numbers for it to make sense. So tracking your numbers is going to be the theme of today's video. You have to. And I know most people really suck at this. And I know most people really suck at it because I've been coaching people on their personal finances for 15 years. Thousands of people a year I've been coaching on personal finances. So I recognize the very inconsistent approach people take with their money. They're not consistently tracking. It's very rare when I see it. I would argue it's single digit, if not low single digit percentages of people that are consistent about tracking. How can you expect to be consistent about your investing if you can't even be consistent about your tracking? Mm-hmm. It's step one. It's walking before you run. It's crawling before you walk.
So that's all about really getting
right, because that's how you make the decision, Michael. That's how you understand what your comfort zone is. And I generally recommend to people to lean into the discomfort. Look, I'm not saying put enough money in there to where you're experiencing sleepless nights. That was my first go at crypto. And when I was losing tens of thousands, it was just eating at me. Mm-hmm. And yet here we are now, and I'm seeing hundreds of thousands in losses, 200 of which is my own personal money. So I just want to be very specific about this, because when I talk about a $550,000 drop, this is not all earnings and winnings and house money that I'm seeing evaporate. These are actual real dollars that came from my pocket. And yet I'm still putting money in. I put money in yesterday. I put money in the week before. I put money in the week before that. And it's not as fun to watch it go down. Psychologically, I think you're right. The shifts in mindset come with time and experience. But by looking at things like this, again, going back into a sort of a data-centric approach and looking at resources that show me that my decisions are the right ones, looking at something like a cash flow cruncher and seeing that of the $2,000 or $3,000 or $4,000 every month that's left over, I'm carving out an affordable $100 a week, $430 a month, and I'm able to then write it off as a money spent, treat it as if it's any other payment that you're responsible for every single month, and forget about it. Mm-hmm. The people that I think experience the most trouble with this are people that are looking at this as a sort of safety net buffer. They're coming in and saying, well, my portfolio is something I can go and tap into. I know I can sell it and it'll be in my bank by tomorrow. It's liquid. And watching it go away, if I were planning on needing it, would be problematic. So if your comfort zone is $50 a week, maybe shoot it to a $65 per week consistent investment. Nudge it slightly higher than your comfort zone, but not so high that it's going to cause you trouble if you experience these dips. I also am very careful about purchasing cryptocurrencies that have the best chance at long-term value. Not going after the altcoins, not going after projects that are hyped up and you end up with these rug pulls. I think it's really, for the most part, and if I'm talking to loved ones, my family and friends, I'm generally recommending just divvying up your investment right in half between 50% to Bitcoin and 50% to Ethereum. And that's where I'm putting my money. I'm putting my money into Bitcoin and Ethereum. I'm doing that each and every week without fail. And I have for 2 years. It's not the same approach I took the first time I was in crypto, but this resource has certainly helped me understand the benefits of the concept of dollar cost averaging. So figuring out your numbers and then figuring out what your comfort zone is from there, and then basically putting a plug and play in place where you just have one of these exchanges that you can go in and set an automatic purchase that you literally practically forget about. And I only say literally practically because I still have to pay attention because I'm coming in and shoving extra when there's money sitting on the sidelines that I want to get in, but it exceeds that average that I'm putting in each and every week. And so I have to pay at least enough attention to where it's painful. It'd be a lot easier if I could just forget about it for the next 10 or 15 years. But I know that in 10, 15, 20 years, I'm such a strong believer that whatever amount I put in, I'm going to wish it was more, that I'm really following my own advice by leaning into a fairly heavy area of discomfort when it comes to how much I'm actually investing into cryptocurrencies. So that would be my answer.
Yeah, so I think, from what I'm hearing, it all has to start with just having your financial house in order. You have to know what additional cash flow you've got every month. Based on that, if there is a time to put more into crypto, for example, that you've got, that dispendable income to be able to put into that. You didn't know that. You don't know those numbers unless you've gone through a cash flow cruncher or something to that extent where you know exactly where your money's going, you know what your excess is every single month. That way, when opportunities do arise, you know if that's something you're going to be able to take advantage of. So really starts there. You also talked about time and experience. So you talked about your first time going through crypto and you did it all the wrong ways. Well, you learned from that experience and now you're doing it differently today. And I can look at my same, kind of professional business career, guys. This will be my third really major economic downturn. I was in business during the dot-com. I was obviously in business during the Great Recession. COVID started, obviously there was a dip there, and now we're looking like potentially heading to another recession. I don't react the same way to markets that I did 20 years ago. And Matthew, you're the same way. Within a couple of years, you've changed your entire investment strategy with crypto. You are sticking with it. It's a system you've got in place now. You set it and forget it, and it's a long-term play for you. So it all started with knowing your own numbers, believing in an asset class, which obviously you do in the digital space, and then just following through and being consistent on it.
Right. Well, it actually reminds me of this incredible, point that I had run into. I even took a picture of it. I was looking for it, but you can see this this message here that popped up on my phone the other day that Usain Bolt has won 9 Olympic gold medals, brother. 9. Do you realize that in order to win those 9 gold medals, he ran for 115 seconds? He made $199 million. So $200 million for 115 seconds. And you can look at those first 2 facts or first 3 facts and say, it's ridiculous. And yet, how easy is it for us to forget that he trained for over 20 years in order to earn that accomplishment? Folks, I think what you're bringing up is such a tremendous point. And there are times where tucking tail and running feels really tempting. it's going to get worse. You know, when they talk about blood in the streets, I think metaphorically that says everything we need to know. If it's being compared to full-blown warfare, it can feel really, really shitty to be involved, you know, right smack dab in the middle of an economic disaster. And this could be a global recession we end up experiencing. The debt loads in many other countries are outrageous. And I think that's one of the key points that I usually end up looking at, is just the over leveraging that's taking place. So it might get really painful, and you have to be strong enough. You have to be strong enough to continue to push forward and understand the opportunities are right in front of you. We may never see another $22,000 Bitcoin. We might see a $12,000 Bitcoin. I can tell you one thing, I'll be buying at both prices, right? And so I'm not buying with everything I have, because my money then gets spread out into other areas in order to diversify my wealth creation. And I'm normally categorically breaking these up. Michael, I'm not sure how your approach compares to this, but normally I'm looking for the long-term net worth investments, comparing that to the short-term net cash flow investing. And the short-term net cash flow investing is the income that we've been discussing. Where do we focus on income streams and building income streams and growing your income, whether you're working for somebody else or for yourself? There's a lot of hard work. And people don't like to face the reality that they might have to put in a lot of hard work for anything. So they oftentimes put their energy into, well, where can I just put my money and it's going to grow? Well, that's a long-term net worth play, unless you're taking really high risk chances and you're in some ways becoming a bit of a degenerate gambler. And that is certainly not what we're going to recommend here on this channel. You might strike it rich and get extremely lucky. And make no mistake, luck has played a role in much of my success, but also hard work through the experiences and being consistent with that hard work, having that new experience. And every time I go out and experience something, I'm learning something new. So breaking those into two separate categories is very, very important to me. And my money is diversified between those long-term net worth investments, money I never expect to need, but want for my retirement years, versus the money I'm putting into the short-term net cash flow earnings and income strategies. And so, you know, cryptocurrencies, long-term net worth, do not put all the money into that. And I think that you'll be very glad that you at least have a portion of your funds going into it on a consistent basis. There's some pretty good resources out there. I mean, I would just do a Google search on YouTube, a Google search or a YouTube search regarding those keyword phrases. You know, what percentage should I put into cryptocurrency, and just see what comes up. I don't think there's any right or wrong answer. Like I said, I think any amount that you choose to put in, you'll wish it was more eventually, as long as you're putting it into the right coins. However, you don't necessarily have to rely on money you already have. Like I already said, if I had just been driving for Uber for the last 9 years and popping $430 a month into Bitcoin, I'd have $2.7 million currently. So, you know, this is a great argument that even people who aren't necessarily as excited about going out and starting a business, building something that's scalable, having a staff and personnel and payroll to worry about, having to get brick and mortar or inventory of something, who cares? You don't need to participate in all this this entrepreneurial trend. Go out there and just 1099 your way to $100 a week, raking leaves, driving somebody's deliveries around, driving humans around. This is easy stuff. There's a really cool channel. Actually, let me give it away while we're on the topic of income, okay? I want to find this channel. Really good young kid. I don't know his name offhand, but shout out to him, because he comes up with these amazing, he basically puts income ideas to the test, right? These TikTok trends. And he goes out and just figures out whether or not he can pull it off. And the ideas that people come up with to easily go out and find hundreds of income in a day is completely realistic. So anybody that's not doing it, frankly, I just don't have a super high tolerance for excuses. All right, so let's see. Let's see if I can find this YouTube channel here. Yeah, his name is Caden Boof. I'll throw it in the description. Shout out Caden. I mean, this guy's killing it by testing this stuff. And the cool thing is he's turning it into a social media business for himself too, where he actually films what he's doing. And then that becomes a new income stream as well. All you have to do is emulate what someone like Caden's doing. And not only will you end up with the $100, $200, $400 for that effort in that day, but you can start to diversify your income inside of that specific space. And frankly, if he starts promoting other things that are doing really well, he can find a way to be paid on those too. There are literally a lot of creative ways that you can make money, not just through the affiliate side, but through sponsorships and other benefits of him doing this on social and showcasing his experiments. So Caden Boof, good stuff. But yeah, I mean, $100 a week, it doesn't even have to come from your own current cash flow. Just go out and make it.